Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Weak global sentiments continue to weigh on equities as investors continue to remain worried on elevated US bond yields amid strong US economic data and lingering geopolitical tensions in the Middle East. Data showed that US real GDP grew 4.9% year-on-year in the third quarter of 2023 on strong consumer, government, and inventories. On the other hand, US personal consumption expenditure, the Fed's preferred inflation gauge, rose 0.4% month-on-month in September at the same pace as in August. The core inflation, though, which excludes volatile food and energy categories, increased 0.3% in September compared to a 0.1% rise in August. Chinese equities were a notable exception this week, which recovered sharply from nearly 5-year lows after data showed China's industrial profits improved further in September, though property-related revenues remained muted. The NPC Standing Committee approved an RMB 1 trillion additional central government bond issuance to support infrastructure investments. For the week, the MSCI World, MSCI Asia Japan, and MSCI China indices changed between a negative 0.7% to positive 2.5%. In the US, the S&P 500 index, Dow Jones Industrial Average, and Nasdaq Composite Index fell around 2.1 to 2.6%. Back home, Indian equities ended lower for the second consecutive week. The Nifty index fell 2.5% for the week, breaching the psychological 19,000 level to a 4-month low on weak global sentiments, lackluster earnings reporting during the week, and continued foreign investor outflows. Broader markets performance was mixed, with the Nifty Small Cap Index down 2.2%, while the Nifty Mid Cap Index was down 3%. Among sectors, all sectors ended the week in red. Metals, capital goods, and telecom were the worst performing sectors, falling between 2.9% to 5.2% over the week. Indian fixed income market had a relatively stable week after many. Indian government bond yields traded flat over the past week, supported by falling US bond yields after data showed that US inflation picked up pace in September, but not enough to shift market expectations of a Fed rate pause in the upcoming policy meeting. The 10-year Indian government bond yield fell 1 basis point to 7.36%, while the 3-year and 5-year Indian government bond yields fell 1 basis point each. The INR depreciated 0.2% against the USD to close at 83.25 per dollar, as the positive impact of lower US bond yields and crude oil prices were dominated by a stronger US dollar and foreign investor outflows. Brent crude rose sharply on Friday to recover losses earlier in the week on worries that tensions in Israel and Gaza could spread into a wider conflict that could disrupt global supplies. For the week though, Brent crude oil prices fell around 2% to close at USD 90.5 per barrel. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.